One of the most common questions we get is this: if you're retired early, what about health insurance? We did retire early and we're living this in real life. And today we're going to walk you through how health insurance actually works. If you're retired early, if you're taking Social Security, but not yet on Medicare, and still want that peace of mind, this is for you.
In this video, it's especially for anyone thinking about early retirement, worried about health insurance, and how all those, how it all works together, how the pieces fit before Medicare kicks in.
Yeah.
So we are going to talk with you today honestly about what we did, what we considered, and what we would want to know, want you to know before making this decision for yourselves.
So let's talk honestly about what we did, what we considered, and what we'd want you to know before making this decision.
So everybody has to deal with the big fear, right? The fear of, and these are the things that most people are afraid of.
Yeah.
Losing employer health insurance, medical bills wiping out retirement, feeling stuck working only to have insurance,
Yeah.
and the myth that you can't retire before Medicare.
Yeah, this fear is real, but it's not the full story. We've had that lost our job for health insurance. When Tyke lost his job, he had no longer had health insurance. There's people that we know that have had medical bills wipe out their whole retirement. There's people that we know that are working only for the health insurance. They have a really good job. It doesn't pay very well, but it offers really good health insurance benefits. And they feel like they are trapped. They can't leave that job before they're 65 because they need that health insurance. And all of these things are real fears, but they're not the whole reality, the whole picture.
So our situation when we retired early, to shed some light on that, at 64.
You retired at 63.
63. I get that a little confused. I wasn't quite eligible for Medicare yet.
Right.
I still needed, some real coverage,
Right.
and I didn't want to gamble with my health.
Yeah.
So we didn't retire blindly, just to be completely transparent here. We planned around healthcare.
Yes, and just to add to that, I retired at 55. So we're going to talk more about that as we get into some of the details. But let's break it down into clear buckets because you have health insurance options before Medicare kicks in. So here are some of the options. The first one that people can choose is the ACA or the marketplace. It's on the internet. You go in there and you choose a plan that fits with your needs, with maybe your health, your diagnoses. If some of you don't know, I'm a nurse and I also worked in the nursing field the last several years of my career directly with health insurance. So this kind of stuff makes sense to me. You can go on the ACA marketplace and you can choose a plan. You can decide which one you would benefit you the most based on your health conditions, pre-existing, family history, things like that. Your income matters on the ACA website. So if you are retired and have millions of dollars, you're going to pay a lot of money for this ACA coverage. That doesn't mean that's a bad thing. If you've got lots of money, you can afford to pay a lot of money for health insurance. But most of us don't retire with millions of dollars, and that's the whole idea we're trying to get across is you can still do this. So like when I quit my job and Tyke was already retired, the ACA could be a great option for that. If you don't have a lot of extra income coming in, maybe some Social Security money from Tyke, but I wasn't making any money at that point, this might be a great option because it does go on your income. So a lot of early retirees that aren't doing a lot of extra stuff to earn money, this is a great option. So go on there and just check it out. They offer subsidies, so some people can get it for really, really cheap. The second option could be if you're getting ready to retire and leave your job, sometimes you can negotiate COBRA into your retirement benefit. But even if you can't negotiate it as a paid option from your employer as your retirement benefit, you can just pay for it. The cons to paying for COBRA is it's usually pretty expensive considering all the other options. We have paid for COBRA before at one point in our careers when Tyke was transitioning from one job to the other, and there was going to be a coverage lapse for about a month. I didn't want to throw him on my insurance because he was going to get his insurance at his next job. So we did pay for about a month of COBRA, and it was around $525. It wasn't quite $550, but it was over $500. So, I mean, that's not bad for insurance. It's more than most people like to pay or can afford to pay. We knew it was just a temporary thing. And if you're considering retiring and you're really close to 65, really close to that age where you're going to take your Medicare payment, maybe that's an option just so you don't have a break in coverage. It can be useful for certain things. It is temporary. Usually it's only 6 months. Sometimes you can extend it. So that's another option is COBRA. The third option could be private health insurance. So these are a little bit less common. There's a lot of people who are willing to talk to you about this and explain things to you because for free, because if you buy their insurance, they're making money on the premium, right? So you can talk to someone about that. I have friends that have retired early and they're paying for Blue Cross Blue Shield, which is private insurance. It does usually cost a little bit more, but it could be a good option for you. And a fourth option is called health sharing. This is an option that is really beneficial to a lot of people. I know a lot of people like people that are basically self-employed. Say you are a real estate agent. Usually you don't have an offer of health insurance as part of your job because you're considered self-employed. So this is a great option for people like this, early retirees or self-employed people to do health share. Typically they say it's not true insurance, and basically when you go online and you sign up for this health share, there's several out there and they're usually like Christian based. There's a few that are not, but you're basically sharing. You're paying your premium, which is whatever it comes out to when you fill it out based on, it's not usually based on age or comorbidities or anything like that. It's usually just based on what they decide based on one person or a family, depending on how many people are in your family. So you pay your premium and it goes in a pot of money. And then as you have healthcare issues come up, or even yearly physicals and things like that, there's a lot of these health sharing that pay for those preventative features. And so you would go in and you would have your doctor's appointment and you would say, I'm a cash pay, I don't have any insurance. And so automatically your service fee would be lower because you're a cash pay, and then you would get reimbursement for that. So those are 4 health insurance options for early retirees that Medicare is not part of that 4 options. So there are a lot of great options. There is no one size fits all answer. So the main thing we want to talk about, we want to tell you what we've done because we've done a little bit of all of these things. We've already talked about how we used COBRA when we had a little lapse in coverage, switching jobs. We've also, when Tyke first retired at 63, he wasn't quite old enough for Medicare because he wasn't 65. But he did elect his Social Security benefit. So he was already getting Social Security, and I was still working because I hadn't retired yet. So I just added Tyke to my insurance at work, which just increased our premium a little bit, but not a ton. And that worked great for us at the time. So we've done the COBRA, we've done adding to another plan. We haven't done the private pay insurance, but I do know people that have done that and they're happy with it. They are paying higher premiums, but it works for them because of their income level and things like that. Once I retired from my job, the health insurance ended. I didn't do any kind of asking for more because the minute I retired, we headed for Southeast Asia to do slow travel. So what we did was a travel insurance plan called Safety Wing. It was a really inexpensive plan for us. I think it ended up costing us about $350 a month for both of us to be on safety. We're leaving the US. So this worked great because if you've watched any of our videos or seen things about people talking about living in Southeast Asia, healthcare is super cheap. So,
and high quality.
And very good quality. Don't think that they're skimping on quality just because it's Southeast Asia, not the US. You get really good. I have a video about how I went to the doctor in Vietnam, and it was one of my best doctor experiences ever. So watch that video if you're concerned about that. So we did Safety Wing travel insurance while we were overseas. And then when we hit the point where Tyke was getting ready to hit the big 6'5", we knew we thought we needed to come back to the US because we thought we needed to be in the United States for Tyke to enroll in Medicare, which was incorrect because since Tyke had already signed up for Social Security and was already getting his payments, they automatically enrolled him in Medicare Parts A and B when he turned the first day of the month that he turned 65. They sent us a card, his Social Security card. They sent it in the mail to our US address, and he was automatically enrolled. They started just taking that premium out of his Social Security check every month. So there you go. If you're worried about being gone, slow traveling outside of the US when you turn 65, you don't need to worry about that if you're already getting a Social Security payment because they will just take it out of your check. They assume that you want to enroll in Medicare Part A and Part B. Now, if you want to enroll in something different, or you want to enroll in Parts D, or some kind of a, what do they call it?
Hybrid.
I'll think of the word. Then you would have to be in the US to do that. And another thing is, if you want to enroll in something different, you only have the 3 months from the first day of the month that you turn 65 as your initial enrollment period to make any changes. Otherwise, your premiums could be higher for the life of until you pass away. So that's something to consider too. So now what we do for insurance at this point in time right now, I'm still not old enough for Medicare. Tyke is 65, so he has Medicare. So I went ahead, so Tyke's enrolled in A, B, and D, which is your hospital insurance, Part A, which is free. You don't have to pay for that. Part B is doctors, labs, x-rays, things like that, anything outside of the hospital. And you do have to pay for that. Right now the premium is a little over $200 for everyone Medicare age. And Part D is for prescriptions, which is also another fee. So the premiums come right out of Tyke's Social Security check every month. And what I have done, since I'm not 65 yet, is I've signed up for the Health Share plan. So the one I chose was called Zion Health Share. I pay around $207 a month for my insurance, and it does include prescription coverage. So I really like it. The advantage of doing this Health Share plan is you get to choose your providers. They don't limit you to a PPO. They don't have specific people you have to see. You don't have to have a primary care. You just go to whoever you want to go to. When you check in, you say your cash pay, which is lovely because people don't know this, but the insurance companies, even Medicare, negotiates rates with the providers. They don't pay the full price. If you go to the doctor and it's $200 for a doctor visit, you've seen your statements. Here's the visit price, $200, $300, $400, whatever it is. Here's the negotiated amount that the insurance says they're going to pay, which is usually quite a bit, like 30-40%. Medicare's even more. So being a cash pay, you can usually get that kind of a discount, like a 30% or 40% discount being cash pay. So you tell them, I'm cash pay, what's the cash pay discount? And then you pay that price out of pocket, and then you get reimbursed by your insurance. So everybody's putting their premium every month into this pot, and when you turn in your expense for healthcare, they send you the check. You have to meet it, kind of like a deductible. You have to meet a certain amount, whether it's whatever you sign up for. It could be 1,000, it could be 3,000, 5,000. You choose that amount when you sign up for it. So that's your deductible, and then everything above that gets paid for. So it's a really, really slick plan. I'm really excited about it, and it works for us. So that's what we have chosen to do with our health insurance. We hope that that helps give you some clarity and some actual details, numbers and figures, and how it works for us. And we just wanted to be open and honest with you about that.
And you know, there's something to keep in mind too: the Social Security and health care or health insurance connection. To clarify, Social Security income affects the Affordable Care Act subsidies, so the ACA, and planning income levels. It matters.
It does matter.
So healthcare costs were part of our retirement math, not something like, ooh, we had to do once we realized we didn't have insurance. We actually put it in our plan.
Yeah. So just remember that if you're going for that ACA website, your income does matter. So even if you've just barely retired and you're not doing anything for extra income, you're not like us, you haven't started a YouTube channel, you haven't started some kind of a side business or side hustle kind of a thing, you don't have any extra income now, but what about in a year or two? So if you do the ACA, just remember your income matters. If your income's going to change between now and your time that you get qualify for Medicare age at 65, that could be a factor. So we just want to make that clear. So what we tell anyone considering this kind of retirement early and the healthcare insurance issue is run your numbers. Don't assume the worst case scenario, because I don't know very many people that are paying over $1,000 a month for health insurance in this early retirement stage. So don't assume worst scenario. Learn all of these details before you quit your job, before you decide to retire. Like I said before, talk to a professional if you need to. These people will talk to you for free, because if you sign up for their insurance, they're going to make their money on your premium.
They're typically an agent, and just consider they're not going to give you completely free advice. They'll give you free guidelines, but ultimately they want you to sign up for their program. So keep that as an option, not an end game and the only thing you can do.
And if you're worried about them steering you toward their product, then meet with a couple of different people from different aspects of it.
Shop around.
And decide what's best for you. There are really good advocates for older people that will talk to you. You'll show them what your health risks are, what prescriptions you're taking. They did this for my mom, and she had the best insurance. She never paid a dime out of pocket. So she talked to a guy that was really knowledgeable. He said, this is the insurance you need. This is the Part D prescription plan you need. And it was great. So talk to some people, decide what works for you. Health insurance does not have to stop you from retiring early. You can make this work. We promise.
Yeah, absolutely. And, you know, it's really, if this is something you're thinking about and you want ongoing and more information, please subscribe to our channel. And we have a lot more real life, real experience and recent experience, all within about the last year. So we're just so glad you're here. If you subscribe, if you sign up for notifications, you'll know when our next videos come out. And
you know what, guys? If you think this video would be helpful to someone else, someone that you know, maybe a sibling, maybe a friend, maybe a relative, send them our link. Send this video, share it with other people so we can help more people with this information. Like I said, I'm a nurse. I worked in the healthcare industry. I worked in the insurance industry. So I'm not the expert, but I want to be your go-to.
Pretty close to an expert.
Your go-to person. Obviously, I don't know your personal situation, but I do know how this stuff works. So we hope that this helped. And like I said, share it and like our video and put some questions in the comment section. And we'll see you on the next one.